Hello, everybody. We're into March Madness. Tim, who you got winning the whole thing?
Dude, I haven't filled one out yet.
You haven't filled
I'm
one out
sure
yet?
I'm sure I'll do it today. Before the playing games. Do they start
Tonight,
today?
yeah, Indiana's tonight, and there's one of the Texas teams. Don't quote me on that as well. And then Wednesday, there's another two more playing games. I like the playing games: Rutgers and Notre Dame, Indiana, and who's the second one? Indiana, Wyoming. Those are
I
good
like
playing
the
games.
Rutgers Notre Dame matchup. Now I have a bracket. I've just been
You can fill it
this
out.
week kind of busy. I haven't been able to.
Yeah, I was just talking to our social media coordinator just like 10 minutes ago before we got on this call about setting up a March Madness thing. And I'm like, we're too late. We'll have to do it next year. It's fine. We'll do it next year. We'll have
Well,
some fun prizes and we'll do it next year.
they give such a small window. If you want to try to get it done before the playing games start, Selection Sunday is Sunday, obviously, and then the first games are Tuesday. So I think that's why they need to just rather than picking those games, you automatically get that in your bracket. So I can have it done
Yeah.
by Thursday.
For
Yeah.
the ones I've got, the CBS ones that I've been filling out, you just pick whoever the winner is. Like if you think whoever the Rutgers India Notre Dame game is going to beat the next round, it just keeps moving and it's just like the slash.
Yeah.
You can make
Otherwise, you're giving people 48 hours to fill out a bracket and it's
yeah.
short time. But I'm still a paper bracket guy. I like paper brackets. And then if I have to submit it online from my paper bracket, but I like to take a pen, write it down, kind of go with my gut, and then I'll put it in CBS or
No matter what you do, no matter you and I, no matter what we do, Maisie is probably going to win because she picked her favorite colors and mascots. So she's going to beat us all. It doesn't matter.
Yeah. And you and I, because we have such a about our knowledge, we'll just say that it's fluky and this year was different, but the fact of the matter is it's a lot of there's a lot of parity in college basketball this year. It's very hard to pick.
It's our biases. Like I walk through the bracket and I'm like, oh man, I don't like Kentucky. And your bias is like you pick them going out second round, knowing full well they're probably gonna go 3 rounds or 4 rounds and examples like that. So
yeah. We're gonna miss some games, but for a good reason on Thursday.
St. Patrick's. You know what? We'll have our phone put out. It's fine. We'll miss like 3 games, not many, 4 games, something like that. And it's not going to be the Gonzaga game will already be over, which is my brother's big one. And then I follow Villanova and they're going to be Friday, so I'm safe there. So
we'll make up for it on Friday. We'll watch some college ball on Friday.
Plenty of games to watch, plenty.
Yeah.
So let's talk about business too, because I like March Madness. It's fun, but we got to do some business stuff too.
Well, March Madness, I guess, is a good little
it is
a good little name for what's going on right now in the marketplace.
Yeah, well, you know what? We'll start with the boring question that everybody asks every time they find out you're a lender. Tim, whereabouts are we with the rates?
Yeah, and just on a daily basis continuing to go up. And there's a lot of reasons why, and it's things I've spoken about on these videos before. Inflation and the Fed's lack action to curb it, or maybe they just don't have control over it. It's out of control, and inflation is always bad for interest rates. Gas prices, of course, everybody knows that. You can't get on Facebook without seeing a post about gas prices. So historically, we follow gas prices to figure out mortgage rates are doing. They're very loosely correlated. And then geopolitical strife, Russia and Ukraine, obviously that takes gas prices too, but financial issues in China, economic issues because of COVID. So many factors, and it's a confluence, like a mortgage rate kryptonite. But we knew that this was going to happen even naturally. Last year, we kept saying, look, rates are great.
Yeah.
It's the time to buy. It's the time to refinance. And in 2022 is kind of a wild card, and we rates to increase, and they did. They've just done it a lot quicker and with more severity than what we expected because of everything else that's going on. So, but when you step back, if you talk to anybody that owned a house 20, 30 years ago, if you talk about people that have been in the business for this long, in the 4s is not hateful.
No.
It just so happens that rates were better, but it is not hateful. Their buying power is still fairly strong. So it's not something to panic about, just something to be aware of.
Yep. Yeah, we talk about it. We harp about it every time we talk on this show, is to make sure that just adjusts your plan. Like we're not just getting into a house, we're planning with you. So you might be in that house for 5 years or 3 years, because you're probably going to end up paying a little bit more for that house than market usually dictates. So you're just sitting there longer. You're 5 years, you're 7 years, but at no point If you wait it out long enough, are you gonna lose money? You know, like if the market goes down, I was just talking to somebody yesterday. It was the guy that came and checked termites at my house. And he's like, "Oh, I'm afraid to buy right now." I'm like, "You can't be afraid to buy right now. You can't lose money." He's like, "Well, if the market crashes or goes down." Well, I mean, it's not, I won't give you all those reasons, but just live in the house longer. And I just stay, make the payments that you know you can already afford because you've been approved for that amount, and just wait, you know? That's it.
I had a similar conversation with somebody. Actually, it was a referral from that this person said, well, not going to be prepared for another year anyhow. So hopefully the benefit of that is the market will crash in the meantime. And I said, let me give you the reasons why that's not going to happen. And we got to continue to educate people as to why there's not going to be any sort of crash. Just, but there's still that belief out there. Easy.
Because it happened in their lifetime. It happened in 2008, and it happened because people were getting bad loans. But that's a digression. You watch any of the older versions of this back and forth we created to see all that stuff. Really, what it comes down to is people have solid jobs, solid credit, and they're getting loans. They're just paying a little more than maybe. There might be a correction, and that's what you keep telling everybody as well. Like there's going to be a correction for sure. But that just gives you in a situation where like you're going to even refinance 5 years now down the road if rates tend to bump back down. You got options. So
yeah, we see some indicators of a recession. If you look at any sort of charts, the 10-year note, mortgage bonds, there are these indicators that a recession is coming. And if we do go into recessionary territory and inflation is curbed, we could see rates fall. But we're not saying that that's going to happen this year.
Yeah.
Could happen next year, could happen in 2024. We're not too sure, but that could happen. So you get into your home now, do what you need to do to get into your home now and purchase a home and become a homeowner. Stop renting, right? Get out of your parents' basement, whatever your situation is, upsize, downsize, and then you continue to have your loan officer monitor your file. Every loan officer in the country has monitoring systems to say this bucket of people have this rate, and we have triggers in the future that if it falls beneath that rate, then we can reach out to refinance or at least consider it. It's not something that you have to monitor on your own. If you lock in at 4.25 and it's fall to 3.5 in 2 years, I'm going to be calling you, not vice versa, most likely.
Yeah. Yeah. Rental. If you can find a rental, good luck with that. If you're going to rent, holy cow. Like there's like 3 in Southern Maryland, like anywhere. It is so ridiculous right now. But you know what, and you and I were talking about this next shift in conversation is with all this being said and done, things are starting to move. I think I saw, it's so weird that I say this all the time, is that it's so weather dependent. Like when it's cold, people just kind of slow down and don't do much. But now that the weather's picking up, I'm seeing things picking up. I got 3 listings appointments this week. I have 2 more people that are ready to list. I got 1 more person finding up the finances. They're going to be ready to list again here soon. It's going to be rolling anytime now. And you're starting to see the same thing with your contracts. Is that correct?
Yes. Part of it is some of these clients that I've been working with for a while, when inventory was so tight, they really cut their teeth on losing offers, which is not a bad thing from yours and my perspective. Have somebody lose a couple offers to really figure out that, yes, you have to put your best forward. You're going to have to go cash above appraisal. Yeah. You might have to waive and things of that sort. So sometimes it takes a few. So a few people that have ratified this week, this is their 7th or 8th offer, but they finally said, okay, let's really go for it. We love this house. Let's a little bit. Let's, do all these other things in the contract that look attractive to a seller. And as more inventory comes in the market, we're going to see these people that have been around for a while finally be able to cap. So that's kind of the scenario I'm in right now. And then, of course, the spring normally every year brings on more inventory, which is desperately needed.
Yeah, and we're gonna have another group of probably retirees and people of that nature. We have lots of teachers, we have a lot of people in rotations here coming up soon, and all those things are gonna be starting to come through.
PCS season has started already, so we have military buyers coming to this area, and that's always staggered. But that is another thing to think about when we talk about the pool of buyers versus the pool of sellers. We have PCS military coming into the area. So, but that also could mean that military are leaving the area. So
Yeah, exactly. Some rotation there too. Now, we talked about a little bit too before we hit the record button that one of the possible strategies is to look at houses that are a little bit less than your approval number. So if let's say you get approved for like 550, looking at houses more like in the 500 range, which allows you a little bit of room to be more aggressive when it comes to making those offers. Is that something you're kind of chatting with your clients?
well, it's definitely a scenario that I think everybody should consider because, if you're approved to 50 and you're looking at 550, those houses are going for 560 and 570. So
Yeah.
it's, you kind of have to go and take a step back and go in the reverse order and maybe lower your price range so you can go cash above appraisal. You can maybe take your sales price up as long as it's going to appraise, so you can take your loan amount up, put a little bit more money, all these different scenarios. So yes, adjusting your price range to the market itself. Now, the other thing to consider is, since the market is appreciated, make sure that if that price range is actually going to get you what you want and you're not settling. So it's a very much give and take, and that's even more important for you to utilize a local real estate agent, local team, and a local lender, because we are the ones that have conversations with you about this stuff and educate you.
So I have one more question while you were chatting, kind of thought of it a little bit as well. You don't do a ton of bridge loans, but if somebody had a lot of equity built into their home, we can do bridge loans. It gives them a little freedom. Can you kind of explain the process?
So that's actually something that we had a discussion about recently within our company, that it is something that we offer, kind of an internal loan that we will say, okay, your house has this amount of equity. We have to make sure that it's actually listed. It can't not be on the market at the time, but if it's listed, we will lend on that for your new purchase, essentially. There are loan to value restrictions. We do get an appraisal on the house that's being sold, so that you essentially tap into that equity before it's actually sold. And then, of course, you sell that house, you pay off the loan. A lot of times, it's an interest only loan. The idea would be that you don't make more than one payment on the bridge loan. Houses are going so quickly that's probably true. Did ask somebody who had done one recently, and they said, yeah, it was paid off before we even made the first payment. It just allows you some flexibility with timing. That's always different.
So yeah, I was going to step back, and so essentially that bridge loan, what you do is you finance, use your house as leverage to find that next house, and it creates a situation where you have the money to make a non-contingent offer essentially on that next house that you're buying, and gives you a little bit of time freedom. So if somebody makes an offer on your house, you may need a little extra time, a 60-day closing maybe instead of a 30-day closing, or 45, whatever the numbers can be, but it'll help you not have to make a contingent offer on that next house. So there is a little bit of strength in making those bridge loans. It just has to be, like you said, loan to value has got to be pretty good, and you got a lot of equity in your house. It's got to all be there, and it's got to be a very specific situation.
And you do have to qualify with whatever that is. So if your bridge loan is for 150,000 and it's interest only, this is you have to qualify with that payment and the new payment on the new house. And then if you have a mortgage on the house that you have to qualify with all these payments. Potentially, like I said, the idea would be that you make a bridge loan payment, but you do have to qualify with it. So it's something that I didn't even really know what it was 5 years ago, because it was never needed. But as the market gets tighter and people have really pull out all these stops, it's something that we definitely should consider.
Okay. So we have options, and we have to, the big part of that too is knowing the value of your current house. And there's a lot of factors that really, those bridge loans is more of a local realtor, local lender scenarios. Like it's much more difficult to have like a bigger company run those things for you, because they don't know the market like we do. It's just not possible.
Right.
All right. Yeah. So we chatted about the loan, the interest rates, the market picking up, some strategies for buyers in general.
I have one other thing that I want to bring up, and it's actually kind of a cool scenario. I had somebody recently that owned a home that they were selling that had a USDA loan on it. They got it under contract and they went to make a new offer, and we set them up for USDA financing on the new purchase. Now, why would we do that? Because the amount of money that they were making on their house was a good chunk, but it was six figures, So they decided to use USDA financing on the so that they could utilize all their net proceeds towards closing costs and not have to ask for any closing help and not have to come with a down payment. So let's say they were making 30 grand, and closing costs are 15. They would net 15, they would put 15 towards closing costs and then move in with no money down on the new house. It is a very cool that maybe the stars align and it never happens again because you have to meet the income requirements and you can't make too much the house. But those are the types of things that we discussed ahead of time. I said, look, you can do this. Let's not try to stretch to a conventional loan and then you have a down payment and closing costs and completing all of your assets from the net proceeds. Why don't you walk with 15 and it's almost a fresh start. Now you have $15,000 in the bank and you're buying a new house, you're grading, cool. You're expanding square footage. So it was a very cool scenario where, it's rare that somebody has more than one SDA loan in a lifetime, but it made sense for this person.
That's excellent. Yeah. And there's just, you sit down and you go over everybody's finances and give them scenarios and options. And they just kind of decide what's best for their life from there. And once you guys have that meeting, it's up to us to help find that perfect situation and be patient and continue to educate people as they go. So it's life planning as much as it is finding a house. Your home is one of your most important assets as for your financial freedom. And it's such a cliche, right? I sound like I'm a commercial. Financial freedom. Yeah.
Dave Ramsey. We psych ourselves out in the industry that when there's 10 offers on the table, the conventional loans with a bunch of money down are the ones that are going to win. But that's not necessarily true if you have somebody, myself or Billy, that can have a conversation with that listing agent. So this particular scenario that I'm talking about, the listing agent questioned, this is a $450,000 house. How are they going USDA? And so I explained to them, within the income limits, they're a household of 5 or more. So the income limit goes up and they would rather offer cash above appraisal and pay their own closing costs to be competitive than just do a conventional loan because it looks better. So it's just about having that extra conversation with the person that's representing the seller, make them feel better about the offer they just received. And that's the extra effort that we'll, of course, give for you.
That's awesome. And it's good to know a lot of other agents too. Like, and there's a chance that whoever it is, I've worked with them before, you've worked with them before, we have a chance hey, Bob, Fred, George, Rita, whatever the name is. This is our situation. We've worked together before. It went smoothly last time. Everything worked out. Trust me, we work hard to make sure it ends well for everybody, that kind of thing. It goes a long way.
It does. Yeah, I agree. The work definitely helps. It's one of the reasons why, if you're comparing apples to apples, well, the person that on the other side that you've done business with and does a good job, they're going to win if all the numbers are fairly close, and that's not necessarily a bad thing. Not only do you want to make the most money for your seller, but you want to make sure that it goes smoothly.
Yep. Exactly. All right. Well, I appreciate your time today. I know you're super busy putting pre-approval letters together this week. So that's a good problem to have. Good problem to have this week.
Yeah, absolutely. Yeah. Thursday. See you Thursday.
We'll see you Thursday. I will say, the shirts are in. Did you see the shirts?
I did. They look good. They look really good. I will. I have a green St. Patrick's Day shirt I'm going to wear, but as soon as I get there, of course, I'll throw one of those on.
I'm going to have to probably put a few aside. I think they're going to go fast. I ordered more this year than the last 2 years because I had a feeling. But our RSVP list is well over 100 at this point.
People love Rubens.
Oh, sassafras. That's some delicious food right there. And then it's going to be Scorpion. He brews some awesome beer, and Gypsy's going to be there now too. Both breweries. It's going to be a double brewery because they anticipate the numbers being pretty high. So
last year there was a huge turnout, and and now
it was COVID-ish.
Yeah.
I think we're kind of
less worried about it this year. Who knows? We might have a better turnout than we did last year.
Plus axe throwing. I mean, no better combination than beer and axe throwing. None.
Oh man, I'm looking forward to it. One of my favorite events of the year.
It's a good one. We say that all the time, but they kind of are. They really we do the best we can to plan something fun for these businesses because they are awesome local businesses, and we want to make sure all the community sees how cool they are. So, and it's a good time.
Looking forward to it. We'll keep checking the scores on our phone, but I have a feeling we're going to be so enthralled in conversation and having a good. We'll forget college basketball is even on.
Yeah, well, I'll catch up on the scores. It's fine. I mean, like you said, there'll be plenty of games to catch up on. I think I'll be all right.
Mhm. Yeah.
And as long as I catch the Nova game, I'm in good shape.
Yeah. Big Jay Wright fan.
Yeah, the worst part about the year is that he's been wearing like the jumpsuits. Like he hasn't gotten like the full on mafia Italian 3-piece suits this year, which I always enjoyed.
Yeah, he definitely looks like Jimmy Hoffa or somebody that we've seen in these movies.
Shoot. All right, man. It's gonna be a good time. We'll see you there, and hopefully we'll see all of you there, and that we've covered a lot of information to help you become a very educated buyer. If you have any questions, you can find us anywhere. Tim's all over the interweb. You can find him on all social media and your website. What's your website again?
Loanswithtim.com.
Easy.
Anytime.
Easy. All right, sir. Thank you again.
See you guys.